Hello and welcome to another 5 with Fitz. I'm Keith Fitz-Gerald. As always, thank you for joining me. Here we go again. The S&P 500 has just notched another record despite it all. Exactly as I suggested would likely be the case in early April when people were pitching out everything but the kitchen sink. Heck, maybe even including the kitchen sink. Volatility is the price of admission. I've said it on more than one occasion. I really want to let that sink in because it's still true. Only now, it's FOMO season, fear of missing out. That could be fabulous for our money as all the Johnny-come-latelys scramble to buy, having realized that they're getting left behind those of us who own the right names at far lower prices because we stayed in to win, something you hear me say frequently. Now, doesn't that feel great? Personally, I think it feels wonderful. Well done, everyone. I know it's not easy, but you deserve to take a deep breath and congratulate yourself on a job well done. Personally, I may even have to break out my victory dance, which is owed to the late, great James Brown. How about you? I hope you have one, because investing should be fun. And if it's not, why are we doing this? Anyway, here's my playbook today. Number 1, most valuable again. Do you still think it's just hype? Nvidia just became the world's most valuable company again, closing with a capitalization of $3.77 trillion after surging more than 60%, 60% since April's tariff tantrum-induced low. Now, the rally is being driven by more than hype, and it's important to understand this. According to the U.S. Census Bureau, AI adoption across American businesses has now hit 9.2%, up from 5.7% just 2 quarters ago, and not for nothing, very close to the 10% that I put on the map less than 2 years ago. Now, why should you care? That's an interesting question. The reason you should care is that this is an adoption curve that took e-commerce more than 2 decades to achieve. 2 quarters, 2 decades. Speaks to the point that I make constantly, acceleration of technology and investing potential. Now, while we're on the subject, remember all the worry warts that I told you to ignore despite trade war noise, export restrictions, and particularly the $4.5 billion write-down tied to the H20 chip curves? Everybody flipped out about that, and I said, hey, wait a minute. Well, I'm glad that I did, because Nvidia is crushing expectations. Q1 revenue has hit $44.1 billion with a B dollars, which is up 69% year over year. Now, you know what to do, and if not, I submit that you need to take a very hard look in the mirror, and you need to ask yourself if you are really an investor or you're a ticker tourist in search of the hot money. Now, to be clear, either of those is fine. Just be clear about who you are so you know what to do, what to buy, and when. All right, number 2. So in at the lesson, I'll get off my soapbox now. Number 2, Palantir flipped the nuke switch. Team Carp just signed a $100 million 5-year deal to co-develop a new nuclear operating system, NOS, which will be, as you might have suspected, an AI-driven platform designed to streamline the construction of nuclear reactors. Now, this is a big deal, and not just because we're talking about Palantir, and not just because we're talking about the money or even nuclear power. The reason it's a big deal is that Palantir has positioned itself for years not just as a software company, but as a builder of operating systems for entire industries. Now, that vision is taking real-world shape in one of the most strategically important sectors on the planet, nuclear energy. But here's the real unlock in my mind. Nuclear energy isn't just a power play, pardon the pun. It is a national security asset and critical to what I call sovereign AI, a term I coined in 2021. The ability to build, maintain, and expand nuclear infrastructure has direct implications for energy independence, geopolitical leverage, and military-industrial resilience. Now, in a world that's also increasingly trifurcated, U.S. versus China versus Russia, democracies versus authoritarian power versus collective regimes, that matters more than ever. And while we're at it, let's remember that nuclear energy comes with some of the most complicated, complex, high-stakes regulations anywhere in the world. And that is exactly the kind of environment where Palantir's software thrives, because it turns opaque, bureaucratic, high-friction processes into data-driven, real-time execution. I mean, boy, was that a mouthful. I'm glad I had enough coffee today. the point I want to deal with, my POV really, now, it's just me. I might be right, I might be wrong. I don't know. But here's the deal. My POV is that most companies build apps. Palantir builds industry nervous systems that produce actionable information capable of making the world safer, more efficient, and more dynamic. Now, I think the move, frankly, the NOS, opens up new floodgates for similar moves in defense, energy, and logistics, and well beyond that in every industry. And I still think $200 a share is where we're going. So, number 3 today. Oh, Shell no, why this is a bad deal, disguised as a bargain. Now, I don't know if you saw the papers like I did. Well, anyway, technically the internet. But Shell has officially denied reports that it's pursuing a £60 billion takeover of British Petroleum, issuing a formal statement under something called Rule 2.8 of the UK Takeover Code. Now, that means the company is legally barred from making another approach for 6 months unless something changes materially, like a third-party bid or BP's board inviting talks. Now, the reason I'm bringing this up is because the speculation came as BP, British Petroleum, is struggling with ongoing investor disappointment, a botched green energy pivot, and activist pressure from, Elliott management. The company's market cap has dropped by nearly 1/3 in the past 12 months, making it a potential target. Meanwhile, Shell has been riding stronger than expected earnings and ramping up share buybacks, something that CEO Wael Sawan says remains a higher priority than acquisitions. Now, reports like this don't come out of nowhere, so I'm not sure what I'm going to do with that comment yet. But the thing I want to bring up is that a Shell-BP merger would create a £200 billion UK oil supermajor. But I'm not convinced that's a win, despite what loads of investors seem to think. So don't get ahead of yourself. BP is a mess right now. Uncertain leadership, failed execution, and a credibility gap with investors. Absorbing that kind of baggage would be a distraction for Shell, I think, and a drag on performance. So, big this morning. Now, contrast that with one of my oil phase, which has a positive true shareholder yield of 8.2%, 8.02%, or roughly 1.7x the listed dividend that most financial sites show you, not to mention 38 consecutive years of dividend increases on the books, not to mention a fantastic pipeline, which is a pun I absolutely intended because it helps handily outperform the S&P 500 with less risk. Now, that's neither here nor there, but my point is I hope you own something similar, have a similar choice in your portfolio, because that'll help you achieve higher risk-adjusted returns over time. And what the hey, generate some cold, hard dividend cash too while you're at it. Number 4 today, this is a big one. Could be China's next big export, in fact. Dr. AI will see you now. And oh, by the way, he's speaking Mandarin. All right, here we go, folks. Ant Group, best known as the fintech powerhouse behind Alipay, is making a major bet on AI in healthcare. Now, the company just launched a new app called AQ, which stands for Answer Your Question. Why it's not AYQ, I don't know, but it's AQ. Anyway, it's powered by large language models developed with Alibaba and DeepSeek, which of course means it's got an element of US AI models built into it, but that's a story for another time. What you want to focus on is that the app lets users consult AI avatars of real doctors, analyze medical reports, even jump the queue for real-world diagnostics if they're needed. It's already tied into more than 5,000 hospitals and 1 million doctors in China. Now, Ant says it's also seen early success with foreigners living in China and plans to expand the app globally in multiple languages. Seems to me that this isn't just about tech. It's about exporting Chinese AI innovation, and Ant is clearly signaling its international ambitions. China's marrying its massive health data pool with cutting-edge AI, and in stark contrast to the glacially paced nightmare that passes for U.S. medical care, it's moving quickly, which is why I think you ought to put this on the burner here. Now, the U.S. has the talent, but China has the scale. Mix those two, and I think you have one whale of an opportunity. I think Ant's move foreshadows a new front in the global AI race, which is why serious investors should be focused well beyond just the tech. And I'll be here if you'd like to join the One Bar Head family and thousands of like-minded investors who are tired for fighting for Wall Street table scraps when it comes to stuff like this, by the way. All right, number 5. Salesforce CEO says AI is doing 30 to 50% of his company's work with a 93% accuracy rate. That's a mouthful, and it's very, very important. Salesforce CEO Mark Benioff didn't mince words. He never has, and I like that about him, but he didn't this time either. AI is now doing 30 to 50% of Salesforce's workload with an internal accuracy rate, get this, approaching 93%. Now, he calls it a digital labor revolution, but I think it's got far bigger implications than that. Companies with the right data, metadata, and infrastructure are starting to create real margin expansion by shifting lower value tasks to AI systems and redeploying human capital towards higher value work. That's why, for example, in the OBA model portfolio, we're filled with companies that are doing that kind of stuff because I want the return on scale. Now, I hope you have some skin in the game. The sooner you get on board with AI, the sooner your portfolio can thank you. And I don't know, folks, how much more blunt I can be. AI will go down as potentially the biggest investing theme in recorded human history because every business on the planet is going to adapt, adopt, or die. Now, if you're not investing in AI in one form or another at this stage of the game, you are kidding yourself. AI isn't just a tech, but something that will alter the course of humanity, the trajectory of our planet. It is already printing a new generation of millionaires. And frankly, I want you to be one of them. So it doesn't matter to me, but the thing I want to drive in your head is start today on your own, or join the OBA family if you want. I don't care. Either way, just get started, dang it. Today's bottom line kind of blends into this. Missing opportunity is always more expensive than trying to avoid risks you can't control. Not sometimes, not part of the time, not whenever you feel like it. Always. So, let's make it a great day. You got this, I promise, and I'll see you tomorrow. Thanks for watching.